And hello, everybody. This is another eye-opening San Diego real estate market update, September 2018. My name is Lenska, and I'm a real estate broker and investment specialist. Please don't forget to subscribe because these market updates are going to be done monthly. And as we know, there's a lot of news out there, but my market update is unbiased. It's based on facts and numbers because here we don't do fortune telling, only do fortune building. So what's happening in the real estate market in September? We usually do analyze the following data points: sales and inventory numbers, interest rates, employment data, home purchasing sentiment, home builder sentiment, affordability, and NODs, notice of default. So we are highlighting the sales numbers today, as everybody already knows that the sales dipped for the second month in a row. But the median sales price is still up for detached homes at $669,000, and which is a nearly same for attached. We're about at 425, which is a 6.3% year over year, and it still increased in the last. Same practically for the detached, also a very steep increase. But just a note of caution, you see how quickly we can lose it in about 2 years. And if you really count from 2009 to end of 2018, so took us nearly 10 years to come back. And active listings, clearly we have topped the last peak for the first time in 5 years in inventory. So we're at 5,359, which is a 17% increase year over year. And we pretty much have the same at 2,272, which is a 33% increase year over year. We also have topped, actually not just last year's, in this case we have topped 2016, but still historically speaking we nearly had 10,000 listings, so that means 4 times as much. Now, last month we looked at the active listings of detached and by price range. So we kind of saw where actually was the inventory building, and we saw it actually building in the move-up market above the median home price. So has the price already adjusted? Let's look at the active listings of attached units in July 2018. Also, we see a huge increase in the 500 to 700,000 and 700 to 900,000 and the million. So overall, attached units show a strong increase in active listings. Now, where is the median sales price actually increasing? Remember, in the beginning we said we nearly had like an average of about 7% increase. So I dissected it by price range again. So not much increase here, but 6.9% in 425,000, the median home price for attached units. And then we're looking at the affordable or below the median home price with the 5%, because right here the 900 or million under, there's not much increase. So practically our appreciation is only happening really below the average median home price right now. And also the days on market it takes to sell a house increased. Obviously, mortgage rates increased. So what does it all mean for an investor? Be careful in which price range you buy buying your fix and flips, and if you do purchase a home, obviously it's the interest rates are up, and the Feds will raise the interest rates another time or maybe two times before the year is over. So if you like to buy, I wouldn't wait much longer. Unemployment is very, very low in San Diego and US. Just something to point out that these blue lines are the recessions, and the 2000 when unemployment was low, we had a recession. When unemployment was low, we had a recession, and here in 1990 employment was very low and we had a recession. And here is the HPSI, the Home Purchase Sentiment Index by Fannie Mae. It practically gives you a snapshot on what people think. Is it a good time to buy? Is it a good time to sell? Are home prices going to go up or down? Will mortgage rates go up and down? And how do people feel about their jobs and their income? And to no surprise, the HPSI rose about 1.5 points, making up a little bit of the loss, the 3-point loss we had in July. Components of the HPSI. Less people thought it's a good time to buy, less people thought it's a good time to sell. Also, people don't think the home prices will go up, but it was offset by a very strong confidence about not losing the jobs. But if we're so confident about our jobs, we should see a wage or household income increase, which is just a +1. So overall, we still are positive. Now, the home builders felt pretty positive because we're still at 67, which is still historically a pretty high number. And in the West, we're even higher at 74. Even so, construction cost rose 30%, and also the tradesmen and construction workers are hard to find, and that causes a little bit of a problem for home builders. Now, to us investors, unfortunately, the home flipping profits were down in the second quarter of 2018. And here are some of the hotspots of the fix and flip markets. And to our own San Diego County, we're looking at Oceanside at the 5-6 zip code at about 148,000. For the other Oceanside zip code in 92057, we had 120,000. And these are gross profits. That means between what you buy it for and what you sell it for. Nobody knows how much money you put into it or how many months of holding cost or hard money you put into it. So practically in San Diego, any profit gross profit under 150,000 on an average flip, you probably will lose money. So Carlsbad, 180,000, Poway, 170,000, in San Diego, 9111, very strong, 173,000, Chula Vista, 164,000, and Claremont, 234,000. And this looks like Claremont has a lot of old small houses that may be one of those best money-making ideas right now to add square footage. Affordability in Southern California, we're looking at San Diego at about 26%. That has been practically the same all year. And the affordability has translated into manufactured or mobile home prices actually doubling in 5 years. So in November 2013, you see it's was at 77,000, which is now in August 2018 at 151,000. Now, as we know, we all need to qualify for a loan, and it is getting harder to come up with the 20%, and you have to have good credit. So there's one thing to notice, that everybody is talking about the fees and tuition cost and the student debt. And if you see how the college fees have increased since 1980, and how the wages and starting salaries have actually not increased, barely hold up with the inflation, that will keep some of the millennials from buying homes. In 2000, how bad is it? In 2005 to 2017, the number of student borrowers has nearly doubled. And that in a time of internet where education should actually cost much less. And also the amount, obviously, that was borrowed has multiplied. So 48% said their loan balance was the same or is increasing. 37% were paying down their student loans, but 15% were delinquent or were in default. And here people, if the economy is on the right track. So the share of Americans who say the economy is on the right track fell 4 percentage points, and meanwhile the share to say that it's on the wrong track rose. So an interesting number, because real estate prices are up, stock market prices are up. People feel good about their jobs, but it is harder and harder to pay for a house or even your rent, and wages didn't keep up with inflation. So maybe that is what is reflecting in that number. And usually we don't have much to report about NODs or trust deeds, but it was a sizzling summer, and some defaults have increased in a few cities. Take Houston, Texas, or Jacksonville in Florida, Detroit, Michigan, and or Indianapolis in Indiana. But in the meanwhile, San Diego, we have a little bit of an increase, but still very, very low numbers, about under 100 trustees deeds. Yes, and next month is October, and I invite you to my 5th annual Oktoberfest. We are celebrating my 10-year anniversary of empowering, engaging, and engaging investors. I have been teaching the rehab field trip for 10 years. So 4 p.m. until no more beer is left. And no need to travel to Germany, because this event will be the shortest way to beer and Wurst. So put on your lederhosen and bring your Stein, sign up, or just email me if you would like to attend. And we have come to another end, and here are my other two events: the rehab field trip, the real estate profit building, and there is my information. If you have a transaction you need help with and like to investigate if it's worthwhile selling or buying, please give me a call, 858-717-0314. See you at the Oktoberfest. Prosit!